I have got good news about silver today. Even though the price has gone down, it's one of those water bottles half full type of situations. I'll explain in this video as we explore. And crumple the water bottle. I may lose some subscribers because of that. Some people are just so sensitive. Any little thing can just cause them to have a little flare up, so to speak, from my voice to a water bottle crackling. Oh my goodness gracious, dogs and cats living together. Oh my. Well, in this case, silver is indeed the metal we're watching today, and it has gone down. But it's still good news, and I might lose some subscribers because of that as well. But I like to bring you the latest news in the world of precious metals. Sometimes it's going to be controversial. Sometimes I'm going to be optimistic about silver when some people think I shouldn't be. Yes, the price has gone down, but you know what? It's still above $30 an ounce. And I have a little axiom that once it reached $30 an ounce, and it stays above that price, well, we can celebrate as silver stackers because the smackdown is something that we've been quite accustomed to for quite a while. And even though the price has fallen, it did go below $33 today. I'm going to give you that market report in a moment. But times like these, whenever there's a dip, and by the way, this is not the good news I'm referring to. It's always good to buy when the price drops and when people aren't loving it or frustrated. And my friends at Summit Metals, well, they have good prices for silver during these times. So check them out at summitmetals.com. But only make purchases based off of your level of understanding of the markets and also within your budget. And you should not buy from anybody, no matter what, whether a channel is being sponsored by a bullion company or not. You have to make those decisions for yourself. I'm just telling you to look at Summit Metals when you price compare and also compare in terms of service. Now, silver's price, the reason why it's good news is because it fell today below $33 an ounce. It got smacked down pretty hard today. But here's where they sit right now. Gold is down only 0.77%, down $23.30 an ounce right now to $3,021.90. Obviously, gold is more resilient here. Silver took a bigger hit. It got down as low as $32.58, well over a 2% drop earlier in the day, but then it creaked back up again. And it is now back up above $33 an ounce. That's the good news, folks. I'm going to tell you why this happened earlier in the day, by the way. Stay tuned for that. So silver is now sitting at $33.08, down 55 cents today. Still a bigger drop than gold, but again, gold is more resilient. It did fall below $3,000 an ounce earlier in the day. Platinum actually fell $6 below $1,000 again to $988 an ounce. And the palladium is the only metal that went up today. It is now almost back up to where platinum is now. Gold to silver ratio still is very high. It's at 91.54. So there was a big plunge. Now, a lot of people attribute this to the Friday smackdown. We're used to seeing this occur on these Fridays. I'm going to show you or talk about what's going on and what's behind this. It is a strong dollar, and a lot of that is based off of the Federal Reserve basically giving us the indication that they're in no hurry to lower rates anytime soon. There will be 2 rate cuts, they say, likely this year, but that could change too. But the dollar has shown some resilience here and has picked up steam now. It is now back up over 104. That's about 1/3% increase in the dollar strength. And that perception there is something that is really having an effect on the metals here. This broad U.S. dollar strength. So it's not just in terms of the numbers here by the U.S. dollar, by the USD strength here, the DXY, but it is broad even above and beyond that. Traders looking for profits ahead of the weekend. And this is something we have to understand about the markets, the natural market forces. Looking into the weekend, when the markets close down, people got to make their decisions on a Friday. That's psychology. So I think there's more to it than just, suppression, which could be involved in some of that, and manipulation. That's a controversial thing as well too. But I believe that the natural market forces are far more powerful than any suppression or manipulation, which, by the way, works in both directions, as I have illustrated, covering what JP Morgan has done with their price manipulation for the precious metals trading desk over there. So that is what we're looking at here. But silver really is, in a sense, not as resilient as gold, but it is resilient. It's going to hold on. It's going to do its thing. And I think that if we start to see these metals take a move in the opposite direction for a continued run, silver will do just fine. And I still believe that we're going to hit $36 silver by the end of the year. That's just under $3 shy of where it is now. But with what we've been seeing here in 2025, it's very possible, even with this movement to the downside. Now, I don't know exactly what the trigger was for them to see this recovery that we've been seeing in the afternoon here, but looking at what has happened, the massive volume that we saw happened right after the market opener, around just before 9 o'clock in the morning, and silver took a massive tumble. And then it started showing some resiliency, popping back up as the volume of trading decreased as the day has pressed on. And now in late trading here, we're seeing it really start to recoup some of those losses now to where it's down much less. But still, it is trading, again, right around that $33.09. In fact, there's a dime's worth of difference between the bid and ask, and it's just below 33 with the bid price. And, with some of this resistance and support for silver, I'm not sure which number they use. Is it the bid or the ask price? Because, a dime is a lot with the spread there between the two. And psychologically, those numbers will play a role in how they move as far as technical analysis as well. And so we'll see how the patterns play out, obviously, is one aspect that you look at in terms of looking at the markets. But geopolitics and the drivers that move people emotionally in the markets is something that cannot be ignored. And I think here with the profit taking that we're seeing, this is where we're at. The market mood remains downbeat, yet U.S. equities are trimming some of their previous losses. And that mood, I think, is part of what is contributing to some of the recovery, perhaps, with gold and silver now, as the market mood remains downbeat, according to FX Street here. Gold and silver remain defensive as the greenback seems to have found its foot with a dollar index up today. The lack of a catalyst keeps traders focused on the main driver of the markets, Donald Trump's trade policies. And that, I think, is another thing, coupled with the market mood being down, and we're coming on to, less than 10 days or so from the tariffs, the reciprocal tariffs taking effect. And I think the market is going to be nervous, and I think that is going to be good for gold and silver, regardless of what the dollar does. So I think that could play a part of a role there, and that is why we have gold and silver. They react to the nervousness in the markets, economic instability, and like Donald Trump or not, the Trump talk or the tariff talk and what has been going on there creates some uncertainty in the economy and in the markets. And gold and silver react accordingly. It's just part of what happens there. New York Fed President John Williams commented that the central bank's 2% target is not for debate or discussion, adding that the current modestly restrictive monetary policy is entirely appropriate. Later, Chicago Fed President Austin Goolsbee stated that when there is a lot of uncertainty, you must wait for things to clear up. Policymakers' comments added to Powell saying that the Fed is in no rush to cut interest rates. This indicates that officials remain comfortable with the level of rates where they're at right now. They stated that they remain uncertain about the economy's response and certainly applied tariffs or certain products imported into the United States. Fed officials updated the projections about interest rates, foreseeing 2 rate cuts in 2025 while revising the economy downward. regarding geopolitics, and we also have to look at what Israel is doing, escalation of hostilities in Gaza to pressure the release of the remaining hostages, effectively abandoning the 2-month ceasefire and launching an attack against Hamas, since Hamas broke that ceasefire agreement by not responding to and ignoring deadlines to release some of these hostages. So we'll see here. Their U.S. Treasury yields are rising, weighing also on bullion prices. And the yields, we talked about some of that yesterday. So a lot of things that we're looking at here, and that could play a role into how the markets react next when the markets open up on Sunday at 6 p.m. Eastern Time. I do a Market Watch live stream, the only channel in this community that does it regarding and focusing on gold and silver. So join me at 6 p.m. Eastern Time on Sunday. The summary of economic projections revealed that Fed officials anticipate 2 rate cuts. We talked about that. The PCE price index, the Fed's preferred inflation gauge, and the unemployment rate were revised higher, while GDP growth is now projected to fall below 2%, signaling a slowdown linked to the trade policies. So we'll see. A lot of that, we'll have to see how it plays out when the tariffs actually take effect on April 2nd. Apparently, that's a hard date, and they're going to be reciprocal at first. And so that means that we'll get better idea on how the economy, how GDP, and all that stuff will be affected by it. So we'll just have to wait and see. The markets are going to be nervous about it by then. But once they take effect and in place, it may not be as bad as some people think either, which means that gold and silver very well could go back down or go down a little bit. We'll see. I don't know. This is something we've not really, it's uncharted territory for the most part here. But nonetheless, there's your market report today, unfiltered, unscripted, and there it is. I hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.